look at the sheet. Lay down the plans for the family to meet. We talking protection, we talking the growth. Securing the legacy, honoring the oath. From the policy sign to the deeds in your hand. It's time that we teach you to master the land. No more guessing games in the dark of the night. We bringing the truth and we turning on the light. Because the foundation you build has to stand through the rain. We clearing the doubt and we healing the pain. Don't let the tomorrow just slip through your fingers today. Listen close to the words that I say. This is the kitchen table talk, keeping it real. Protecting your pocketery, writing the deal from life insurance safety to real estate dreams. We breaking down barriers, busting the schemes, yeah, we building it right, making it last, securing your future, healing your past. I see the confusion when numbers get deep. Believing your family exposed makes you.
Hello, everyone. Call me Keith. Hello, everyone, and welcome back to the Freddy Metro network of channels, whatever. Here's a question for all the grandparents out there. Hey, first of all, you're blessed. But can you actually, as grandparents, buy life insurance on your grandkids? And if you can, you should. Today, we're answering both of those questions. You know, can you and should you? And I promise you the answer isn't as simple as a salesperson may make it sound. Let's start with the basics. Yes, grandparents can buy life insurance on a grandchild. Most companies allow this, but there are a few things that have to be true first. There needs to be what's called an insurable interest. This is why I can't go down here and insure my neighbor who is a repeated drunk driver. You know, just making it up hypothetically. Because we know he's out there gambling, might as well cash in. No, I'm just joking. Not really, but I can't do it. Basically a financial or a family relationship that justifies the policy, justifies the policy is what insurable interest is. Grandparents generally qualify for this. And second, the parents usually have to consent to the policy as well, since their child is, they're the child's legal guardian. And third, there are typically limits on how much coverage you can get on a child. Insurance companies don't want to create a situation where a child is worth more dead than alive. So coverage amounts are usually modest. Now, notice I said there has to be a insurable interest that is either family relationship or financial. My hypothetical made up neighbor down the street that has a drinking problem, if he and I had a business together, oh yeah, I can write that up. We have a business together, yeah. We have a print shop, we own a franchise, something, that makes an insurable interest. But right now, we just in the same HOA and don't nobody care. Now, why would a grandparent even consider this? There are a few legitimate reasons. Some policies, especially whole life policies, build cash value. So over time, it can act like a savings component that the grandchild could access later in life. Matter of fact, one of the earliest stories is about a very wealthy man out of, I'll just say, West Central Georgia. He does that for every grandchild he has. Yeah, and it really works. Now, some grandparents like the idea of locking in insurability while the child is young and healthy, meaning that the grandchild will have coverage for life. You can insure a child after 30 days of life, right? Now, regardless of any health issues that might develop later, and of course, if something tragic ever happened to the child, God forbid, a small policy could help cover funeral expenses during an incredible, difficult time for the entire family. But here's what you need to understand clearly. These policies are generally small. We're talking $10,000, $25,000, or $50,000, coverage for a child. Now that all changes if you are a multi-millionaire, as the grandparent is down in West Central Alabama, West Central Georgia. If you're a multi-millionaire, the rules change. And the cash value that builds inside of these policies, it grows very slowly, especially in those early years. But a portion of every premium dollar goes toward the cost of insurance, and company fees before anything, starts building cash value. This is really important to understand because of what we're about to talk about next. I won't play my fraud sounder, but when we get to that point, I'll decide. This is really important. Okay. There's a sales pitch that is targeting loving grandparents, and it goes something like this. An agent presents a small whole life policy on your grandchild as a college funding strategy or a tax-free college miracle. All right. They show you illustrations of the cash value growing over 18 years, and it looks like a nice chunk of money for college. Okay. Here's the problem. When you actually run the numbers, these policies often have high fees and such small coverage amount that the cash value that does grow, it barely keeps up with the pace of what you put in. And let alone it grows meaningfully enough to dent today's college costs, which can easily run 20, 30, 40, $50,000 a year, depending on what the child, gets into or decides to go. And, and the agent might be very sincere. That's why they want to pay the fraud sounder. And I do offer a product that does that to a certain extent, but it's not nearly a fraud. I just want people to be clear on how these products work. IUL can do that depending on how much money you put into it. Whole life policy can do that depending on how much money you put into it, especially a 10-year whole life, which most people that I come in contact with, do business with, can't afford, to be honest. You have to really put money into that thing, but will it pay for your daughter's graduation from a nice institution? Oh yeah. If you get it when she's just born, about one year old, and you put all the money in within a 10-year period, that thing can really grow. But sometimes the math just doesn't equal the sincerity of the agent, or the numbers on the paper may be misguided. So you have to protect yourself, and your grandchild's future. If someone pitches a life insurance policy as a college funding strategy, ask to see the guaranteed cash value, not the projected one, in year 18. The guaranteed is usually going to be done. That illustration is going to be done at like 1 to 2%, right? With inflation, that's what's going to actually happen. The non-guaranteed part of the illustration, they will usually run it at a higher interest rate. But most states, like Georgia and Alabama, they were kept at interest rate at about, don't show nobody more than 6 to 8% a year. I don't care if we made 12% over the last 10 years. Do not show nobody a illustration over 6.28%. It changes all the time. For instance, 6.3% for 18 years. Just show them that. That's going to give them something but that ain't guaranteed. That's a non-guaranteed projection. Some years will be 0, some years could be 18 in actuality, but the projected one at an 18-year value is not the one you really should base all of your analysis on. You want to compare that number, the guaranteed to non-guaranteed, and simply put the same premium amount into a dedicated education savings amount instead. Under Georgia and Alabama insurance law, agents must provide an accurate illustration that cannot misrepresent life insurance policy as something it isn't. The company that I use to run illustrations, when we first started, we used to be able to change that amount. And, I would just play with it. You put 15% across 18 years, oh yeah, that child's about to be a millionaire, going to college, driving a Corvette. But all of a sudden, when I first started, this is 2017, they stopped us from doing it. They didn't want us playing with it. Because what? Apparently somebody's running these humongous illustrations, taking it to somebody's house, using their business to misrepresent people. And that's why all these companies and providers, they stop. If you want an illustration, call us and we'll run it. You know what I'm saying? But if the policy has been sold primarily as an investment or a college fund rather than life insurance, which is number one when we talk together about this, that's worth a second opinion from an independent financial advisor before you sign, or at least talk to another insurance agent. If I'm not even licensed in your state, feel free to leave a question in the comment or send me an email. I can comment on anything. I'll look over anything for you. I'm here to help. All right, let's wrap this up with a money saving tip. Where's my sounder? Got to save that money. Yeah. Okay. Money saving tip that's perfect for grandparents who want to do something real for their grandkids' future. We've all done it. You've seen your grandchild and you want to bring them something like a new toy, a little outfit. Oh, your little Garanimals. They still sell Garanimals. I like my Garanimals. I used to figure I used to match my own. Anyway, some treat from the store. My granny used to take me down to Bargain Town to get that burger in the back. I was like, why does he come down here? And I found out he went there every doggone Saturday because when he was growing up, he could not go in there. But anyway, those little purchases, they add up. $20 here, $15 there, and most of these toys end up forgotten in the box, torn up, or down at their friend's house, within a few weeks. So here's a swap. Instead of grabbing something every time you visit, pick a fixed amount. Say $25, $50, and put it into a 529 college savings plan. Yeah, I'm talking to you, Curtis. Ain't never gonna see this video. Or a simple savings account with their names on it instead. You know what I'm saying? Like, they be like, well, grandma used to bring me money. She don't do nothing no more. Hey, I got you covered, kid. And here's why this is so powerful. $25 a month for 18 years, even without any growth, adds up to $5,000. $5,000. That's without any kind of, we got this interest. We made $5,000 straight up, $5,000. With the type of growth you can get in a 529 plan. I use one in Iowa that has done well for my children. Over time, that type of account can grow significantly more. And if you have multiple grandchildren, of course you want to do one for each one, or you could just do one big one because you could add their names later. Actuality fun tip. When my first child was conceived, I started a 529 in my wife's name and began to put money in it. And when my child was about one, put it, and when that child, I started another one because I know they're going to have a second child. And by the time the third child was coming, we did the same thing. We started them saving beforehand, in essence, because my wife never went back to school. But that's how 529s are. As long as they're a relative, you can move that money around as you see fit. Now, the beautiful part is this doesn't require you to spend more money than you already do. Even if it's $5, get something started. It's just redirecting money that is already going toward a small gift or something you actually, into something that you actually will matter big time when you're 18 years old. Those loving gifts and gestures are nice. You don't want to just cut them all out. But if you consider using a 529 or just a plain savings account for this child, years from now, your grandchild, is going to just thank you forever. They might very well remember that grandma and grandpa helped them pay for college books or their first apartment or maybe a down payment on a home at some point. So to recap this video, yes, grandparents can buy small life insurance policies. Most of us, small life insurance policies, if you're a millionaire, they'll let you do bigger things. But understand these policies are, they're typically small for most of us. They're not college funds. Monies can be used in certain policies to do different things, but it ain't necessarily a college savings plan. Be skeptical of anyone calling a tiny policy a college funding miracle. I think that's what my mama went for a long time ago. I can't think of the name of the company. They're long gone, but they gave me all my money back right when my mother passed away. So the proof with the insurance. Some companies they ain't loyal. And consider redirecting small gift purchases into a fixed annuity contribution or into a 529 plan or a savings account, instead of making those small purchases from Walmart or Walgreens, KB Toys, what have you. And that's all I have on this. If you have any questions or comments about anything I said today, or if you want to check me, correct me, whatever, help me, please reach out. My information is right here. I look forward to hearing from you. And until next time, always take care of yourself and each other. God bless you. See you next time.
Oh, 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 oh.
It's more than a paper, it's peace in your mind. It's leaving a blessing for those left behind. We talk about life, but we don't plan it. And leave all the debt to our family and friends. I sit at the table and show you the chart. How a simple decision can mend up a heart. Life insurance isn't for those who are gone. It's to make sure the living can carry it on. Policy and peace, that's the way that we live. Securing the future and learning to give. No more GoFundMe's to cover the cost. We protecting our families from devastating loss. Yeah, we standing tall and we making it right. Walking out of the dark into the light. The middle class struggles when tragedy strikes. We changing the narrative, changing the lights. We making sure everyone sits at the feast.